Hey guys, Casey here. Welcome back to Lions Den Investments and Reviews. Hope you guys had a good week. It's been pretty busy, so I apologize for not getting a video out sooner. If you're new to the channel, hit that like button, subscribe to the channel as well. Basically, we cover the crypto markets as of right now because that's where all the smart money is going. So basically, I think what I'm going to do here moving forward, though, is just give you guys uh, more technicals on what we can do to capitalize and make the most out of this last leg up. A lot of people right now are, panicked. They're in fear, rightfully so. If you're new to the market, you probably don't understand how these markets work in the first place, especially when it comes to fundamentals and FUD. Speaking of FUD, you guys had heard that China came out just recently and decided that they were going to ban Bitcoin. Well, guys, this is old news. It's nothing to worry about. And if, again, like I said, if you're new to the markets and you've never been in this market before, you're not going to understand the fundamentals and what FUD is all about. And I want to bring up this article here because this is, like I said, is old news. Okay. And for people who've been in the crypto market and experienced the last bull run, uh, me myself, I experienced this. And this same exact thing happened in September of 2017, okay? China, Bitcoin, the ban sparked a $20,000 all-time high in 3 months. And guys, I'm going to tell you right now, this is exactly, this type of FUD right here is exactly what pretty much, screwed me in the last bull run, okay? Because I was investing in Bitcoin back when it was like $800, $900. I was investing in Ethereum from $20 on its run up all the way up to 80. I had never been in this market before, so I didn't know how high prices actually would go. I wasn't even aware of that. All I was paying attention to was fundamentals. And of course, the FUD came out with China banning cryptos. I got panicked and I ended up liquidating and I got out right there in September before we got that super parabolic leg up within 3 months. And I ended up getting priced out. It was pretty much the biggest mistake I've ever made in my investing career. And, you know, you win some, you lose some, but I got smart pretty quick after that. And over a time span from 2000, at the peak of the bull market in 2017 going into 2018 on into now, all I did is study wealth cycles and I studied the markets and I studied, um, the entire experience that I went through. Okay, when it comes to like the fundamentals, FUD, just learning the technology, all of that. Okay, and what I came to a conclusion, and that conclusion was that the best thing to do in these bull markets is get in before they peak. Okay, get in before they ever start. As a matter of fact, study the wealth cycles. Okay, because the wealth cycles on Bitcoin and the entire crypto market as a whole are as predictable as the sun coming up and the sun coming down. Okay, they work in four year increments, and the price actions may be different and vary uh, from one cycle to the next, but they always end up in the same time frames for when they start and when they end. All right, and I can tell you with about 99% certainty, this bull market is continuing, and it'll come to an end here probably sometime between the dates of December 6th going on to, if we get an extension on the rally, it could extend us into January. Okay, but with that said, um, nothing to fear here, guys. All right, I always say fear nothing, and this is why, because this is just old news. And basically, what they're doing right now, okay, if you understand smart money and what they do, they buy before the wealth cycle ever starts, and they accumulate on the way up. Now, you're going to start seeing over the next 3 months, because this happened last time too. You're going to start seeing very smart individuals in finance, respected celebrities, people with a lot of money. They're going to start coming out on mainstream media and telling you how much money they've been making investing in cryptos. Now, the reason why they're doing this is because if you understand markets, you always need a buyer and you need a seller on each side of each trade. Okay. Now all these people, the smart money, the whales, have been accumulating and they're sitting on massive profits. Okay, we're talking billions of dollars, hundreds of millions of dollars, and they're looking to liquidate. And in order for them to liquidate their positions, they're going to need buyers on the other end. And what you're seeing right now with this flood, all it is a way for them to smash the price back down one last time before we go into leg five. And if you're wondering, what's leg five? Well, I made a post yesterday, and this is on the overall Bitcoin market cap, and I'm using a different reading chart here. It's tied into TradingView, but it's a little bit better because if you go to charts.cointrader.pro, okay, that you go to that website right there, charts.cointrader.pro, it ties back to the TradingView platform. Now, why I look at this one versus TradingView is because this market cap, it averages out the price movement amongst all exchanges across the board. So you get a much more accurate price movement reading. And what I'm trying to show you here is what they call the Elliott Wave, okay? This is based on cycles. And I posted this yesterday. And what I want to do real quick is just explain it to you. So basically, you get these impulse waves. And there's, in an Elliott Wave, it's based on well cycles. You'll get 5 different impulse waves. Okay, so you'll get one up. Let's go over here real quick. You'll get one up on leg 1. You come down to leg 2. That's one impulse. That's another impulse wave. Then you get another one, leg 3, which is an impulse wave up. Then you get an impulse wave down on leg 4, and then an impulse wave on leg 5. And then what happens is people start liquidating and taking their profits. Okay, the whales, the smart money, the people I'm telling you about, they're going to come out here in mainstream media over the next 3 months. That's exactly what they do. They come out there, they hype it up for people who are just getting into the markets, who don't know any better. They're going to FOMO in because they see these people who've made all this money. What they don't understand, though, these people got in back here. Okay, they got in before this cycle ever started. And now they're trying to liquidate, and all the new money, okay, the sheep that I always talk about on my channel, are going to come in and start buying it up. But they're going to buy it up on high prices here, not knowing that the smart money is just going to pull the rug out from underneath them. Okay, and then what happens is you get this ABC correction. These are impulse waves on the way down. People start panicking, and rightfully so, because they start losing their money because they bought in here at the top. You do not want to be one of these people who buy in at the top of a well cycle. Okay, the whole goal is to buy in at the bottom and liquidate at the top, just like the whales and the smart money do. So, this market cap here, you get the ABC correction, so it goes leg A down, then you get a leg B up, okay, to bring the price back up. This is a sucker's rally. That's what I call that. If you look at well cycles, it's just a sucker rally. You get rejected here at the top, and then you come back down for leg C. So I'm expecting a bounce off support at a higher low, somewhere right in this green area, okay, on the overall Bitcoin market cap. So I would expect Bitcoin to come down. If we go to TradingView, I'm expecting it to come down somewhere still where I was telling you we should be, like, at the minimum, probably about 41,000, 40,000, somewhere right around there. If we drop lower, I'm looking at the overall bottom to be around like 37,000, 38,000. And then, guys, from there, we are just going to bounce off of that right here for a higher low, and then shoot up into leg 1, and we're going to start this whole well cycle that you saw back here. We're going to start that whole thing over again, okay? And that should take us into the last 3 months of this bull run. Because, again, if you understand smart money and you understand what the whales are doing, they're going to have to liquidate their positions. So they're going to need buyers on the other side of that. And the only way to do that is to get the mainstream media behind it, okay, and really start, pushing more positive news. So I don't want to, moving forward on this channel, I'm not going to really cover so much of the fundamentals like I have been, because I already know where the fundamentals are. They're very, very strong. They're very solid. They're going to be that way for the next 3 months. But after that, we're going into a bear market. Okay. So just for this last 3 months, I'm going to really try to help you guys understand how to plan your exit so that you can capitalize the most that you can possibly make off of this last 3 months, because this is what counts right here, guys. This is it. Okay. And with that said, let me just show you real quick what I'm doing. And this is how I am planning my exit strategy. So if we go over here to Theta, because Theta is one of my bigger holdings, right? The easiest way to do this is to pull up a chart, okay? And then go over here to the Fibonacci retracement tool. And what you want to do is look at the last run up that we had, okay? This big, whatever chart you're looking at, look at the previous surge or run up that we had. Could be on any chart for Theta. It's pretty simple because we had this really, really big surge run and move up. But what you're going to do is find the very peak top, and you're going to draw a line all the way down to the bottom, okay, of where we are right now. So, and this is playing it conservative, by the way, okay? If you could take it all the way down here if you wanted, where we started, the surge up. You could take it all the way down here if you wanted to, but just to give you conservative numbers so that you actually hit your targets, I would just go from right here. But you pull that all the way out, okay? And then the next thing you want to do is go to your settings, and from your settings, you're going to pay attention to the 0.618 mark on the Fibonacci retracement. You're going to keep the 0.618 going, but what you want to do is add the 1.618. You're just going to put a 1 in front of every level above that. All right, especially when you get into, if we go over here, you see how we got the 0.618 right there, then it goes to the 1 right up here on these levels up in here. Those are the ones you want to just put a 1 in front of it. Okay, so you're going to have 1.618, 2.618, and again, just click on it, go to settings, and you can change all that in here. Okay, like you can see I've got 3.618, 4.618, 5.618. But that's what you're going to do. And then what you want to do is just go up here and mark out your prices. So I've got the first level target price at about 24.83. I've got another here. Sorry about that, guys. I've got another here at 37.95. We've got another at 51.07, so forth, so on, right? Now, the reason why I'm showing you that is because we go back here and we pull up like Ethereum, for instance. So if we pull up Ethereum here, all right, I'm going to show you real quick. If we go back all the way down here to 2017, right, when we had that first move up, look at the surge from that cycle right there to this one over here, which we're in right now. If we take the Fibonacci retracement, all right, and we do the same thing over here from that last cycle, so we could go all the way from here to here. Look, I want you to pay attention to something real quick. Okay? If you look at this chart, we go back to the 1.618, 2.618, 3.618. You can see at every level where the price runs up, and we pretty much peak out at the 1618. We come back down, then we make the next move up, and you can see we blew right past the 2.618, so we hit that target, and then we move all the way up here to the 3.618. Okay, so what I'm saying is these levels are very, very accurate when you run them parallel to last the last well cycle that we had. So with Ethereum, for instance, I can already tell you right now, the first target, okay, you'd have to erase that, but I wanted to show you the accuracy and why I use those. And you go over here to the Fibonacci, okay, and you do the same thing again from this last previous run up all the way down, and this is just playing it conservative. But you would take that right there, and I can tell you for sure, just based on that last well cycle on Ethereum, with about 99% certainty, you're going to hit prices of 5,825. You'll get to probably about 8,383, and at least I'm going to say $10,940, just based on what I showed you there. Okay, and this is just going off of well cycles. So that'd be one thing you can do to get some targets in place for your assets, so you know at what levels to go ahead and place sell orders at. The other thing you want to do is dollar cost average out, guys. Okay, so don't wait for it to hit like just one price and then dump all your bags at once, because what if exchanges were to go down, right? Then you might get stuck holding all your bags, and you won't be able to lick any of your ice cream on the way up. Prices could swing, up or down, and you're stuck there trying to liquidate. If that were to happen, one thing you can do is go to one of your private wallets. So you can go to like Atomic Wallet or Exodus Wallet or something like that, and you can convert to a stable currency like USDC, for instance. I wouldn't recommend that because you're going to pay higher fees that way. And for me, I look at it as a cost of doing business to try to stay safe in case something like that were to happen. So you could do something like that if you want to. Wait for exchanges to come up, come back up, convert your USDC or USD Tether, convert it back to Ethereum, move it over to the exchange when the exchange comes back up, and then liquidate that way as well. So that's something to consider. The other thing that I would highly recommend doing is taking your total amount that you have invested in one of your assets, okay, divide it by 5, so you got 20% increments, and at each target that we hit, what you do is you liquidate 20% off the top, and then when we hit the next target, take another 20% from that balance, liquidate it off the top, okay, and so forth, so on, as we hit each target. That way, if you get up to, like, let's say we go super parabolic and you get a major extension in price, you're not liquidating everything and missing out on some of that move up, right? And the way I've got it set up here, guys, you'll basically make your last sell on whatever you're holding. You'll still have like probably 40 to 50% of your bags left. So you'll be able to liquidate most at the very top, all right, and get the best bang for your buck. That's what you want to do. So if you like what you're hearing, hit the like button, subscribe to the channel, because I'll be doing more technical analysis, like I was saying. I'm not covering so much of the FUD, and I'll take you over, different charts. We'll start looking at wealth cycles, because the beautiful thing about this, guys, not only can you make money on the way up, but you can make money on the way down too. So one thing I plan on doing is making money off of shorting Bitcoin on the way down, because you got to look at your odds, okay, when you get into trades. It's about a 1-year trade. So when we peak out here in December, you're going to get 1 year of just nothing but downward crash movement. And I can tell you from looking at all different wealth cycles in the past, whether it be Ethereum or Bitcoin, you're going to get at least an 80 to 85% drop. Cryptos, altcoins, for instance, will drop a little bit more than that on Bitcoin, as compared to Bitcoin. So sometimes you'll see like anywhere between like 85 to 90% drop on altcoins, but you can make money on the way down too. So you can short these with leverage and make money that way too. I wouldn't recommend it if you're new, because it's more advanced trading. You got to know your risk to reward, money management, how to handle all that, so that because you're magnifying your profits. You can make a lot more that way, but if the trade goes against you, you can lose a lot more money fast as well. So you want to be able to play with stop losses, stuff of that nature. So if you're somebody who's new, I wouldn't recommend just jumping in and shorting Bitcoin or something like that, you need to learn about it. Now would be a great time to do it because you got about 3 months here to study up on that kind of thing. Maybe get yourself set up so you can try placing a short trade on the back end of it with some of your profits. And you're not playing with money out of your own back pocket. So if you do lose, you're just losing some of your profits in hopes that you make more money and profits off of leverage. It'd be a great way to practice and get in and get your feet wet with shorting assets, because I can tell you that's what the smart money does too. They don't only make money on the way up, but they make money on the way down too. Um, but that's all I've got for today's video, guys. I hope you guys like the content. I'll be shooting videos next week, and again, like I said, I'll cover more of the wealth cycles, more things that you can look at for exit strategies, and we'll start looking at some of the impulse waves that occur over the next 3 months, because I think you're going to be very, very surprised that we're going to hit some of these targets on this next move up, because leg 5, guys, always dwarfs whatever we've done from the previous surge up in price. All you have to do is go back and look at a Bitcoin chart over the past, say, 12 years, and you're going to see each peak that we have, that we go up in a wealth cycle, it'll come down, and then we'll go into another one, okay, 4 years later, and that peak is just, I mean, it dwarfs what it did before. And you're going to see the same here, okay? And just keep in mind, no matter what FUD comes out, like I always say, have no fear, my friends, right? They're going to come out, they're going to push some FUD maybe to bring the price down over the next week or two. I've got us starting leg 5 here probably around like October 10th time frame. Could be a few days off there, but I really don't care, because they're going to push the price down here over the next two weeks, would be my guess. They're going to, accumulate whatever they have left for one last run up. Then you're going to see the news and the sentiment change, and they're going to start really pushing this thing and hyping it up so that all this new blood comes back into the markets, and they're going to get them at the very top when they're coming in. People fear of missing out, right? And they're going to pull the rug out from underneath them and dump all their tokens, because all these buyers are coming in to buy up. You see what I'm saying? So they're going to have buyers on the other end to go ahead and liquidate. And you can't blame them for doing that. You really can't. That's why I can tell you that we're not done. We're not done with this bull run. They need the prices way higher than what they are so they can make their profits, get out, let it come down over a full year, short it as well with leverage, make their money there, and then they're going to come back in and accumulate for the whole, remaining bear market, which should last probably about 2.5, 3 years. So, yeah, get ready, guys. Buckle in, because we are about ready to take off here. And with that said, I will catch you guys in the next video.